What is growth investing? Growth investing is a strategy that aims to buy the stocks of companies that are growing their revenues or cash flows faster than the rest of the market. As the name suggests, growth is the priority. That means growth companies reinvest their profits in order to expand their businesses more rapidly. Investing in growth companies offers you the chance to earn greater returns from climbing stock prices, but this approach is riskier than other strategies. There's no guarantee that a growth company will drive greater profitability over the longer term. In addition, growth stocks experience more volatility, marked by dramatic changes in value. It's an approach that's best suited for risk-tolerant investors with a longer time horizon. Growth stocks tend to see strong gains during periods of economic expansion when interest rates are low. After the financial crisis of 2008, for example, growth stocks saw a massive rally that lasted right up until the end of 2021. Over that period, they significantly outperformed value stocks and the S&P 500. Unfortunately, the era of historically low interest rates and climbing growth stock valuations has ended. With inflation near 40-year highs, the Federal Reserve has embarked on a rate hike campaign that is taking the wind out of the sails of growth stocks.